Welcome back. Will banks start lending again? In 2018, business loan growth was sluggish throughout the last year, and during the final weeks of the year, certainly, borrowing dropped to the lowest level since the financial crisis aftermath. Federal Reserve data shows that loans to businesses were up only 0.8% for the week of December 13th compared to the year earlier. That was the lowest level of growth since the first quarter of 2011. It comes at a time when many expected a lending boom under the deregulation that we're seeing of the Trump administration. Joining us right now is the CEO of Citizens Financial Group. He's the chairman and CEO, Bruce Van Saun. Bruce, good to see you. Thanks so much for joining us.
My pleasure.
Characterize the situation for us right now.
Well, I think what we saw in the second half of the year, many companies had already pre-funded and had good cash positions on their balance sheet. I think they also saw a lot of uncertainty in Washington, so they held back a little bit. And so what they were waiting for ultimately was that the sign that Washington to get things done. And they passed tax reform. I think that's a very positive development, and I think you're going to see the animal spirits unleash a bit as we get into the first half of the year.
So what's the impact of the tax reform package?
I think it's very positive from a number of respects. One, I think just having companies' after-tax cash flow increase is going to allow companies the opportunity to do more investment, which will be very positive. I also think that we're allowed to now companies can expense capital expenditures right away, which will boost investment in capital expenditures, which will in turn boost labor productivity, which we've been waiting to see for a long time. I also think dealing with the overseas cash and tax problem and moving to a more territorial tax system will bring more cash and investment back to the U.S., which will also strengthen the U.S. economy.
That's great.
One of the biggest investments themes we saw in the last quarter was basically everyone going into financials, and one of the reasons why was because of the tax benefit. You guys are taxed at such a high rate. Right. I think in December, your CFO at the Goldman Sachs conference said you're going to get a net benefit. This is actually positive for your earnings. Is that still the scenario?
Yeah, we benefit in multiple ways, but right now we have what's called a deferred tax liability on our books. So when the tax rate gets cut, that creates a one-time benefit for us, which is about $325 million. So that's really positive. But then also we're a high rate payer, so we've been paying a 32% rate, and our rate will move down into the low 20s. So on an ongoing basis, we'll have a benefit. And then lastly, we just are reflective of the economy. So I think as the economy picks up, demand for loans goes up, as we just discussed. And I think the faster growth leads to higher interest rates and gives the Fed confidence to raise rates. And so most banks like us have a bias towards asset-sensitive positioning on the balance sheet, so net interest margin should go up as rates continue to rise.
And you have a higher net interest margin than a lot of your peers.
We have higher asset sensitivity. I'd say our net interest margin is about catching up to peers. We were behind. We've been repositioning our balance sheet to be more selective about how we play and where we play. We've done some great things like a program with Apple to take on some interesting consumer loans. And so we're making some good tweaks on the balance sheet, which is improving our net interest margin.
Bruce, we've had a lot of regulatory easing, but not a lot of real reform when it comes to things like Dodd-Frank. What would you like to see, and how would you characterize your regulatory environment today?
Well, I'd say the number one thing is more tailoring of regulation. So I think there was a lot of good that came from the regulatory reforms after the crisis. But one thing is the instruments were fairly blunt, and there was a one-size-fits-all approach. A bank like us with $150 billion in assets and a relatively straightforward business model is not the same as a money center bank, and we had to do many of the same things. So what we really want to see is more tailoring, and I think the Senate bill right now looks at where the SIFI designation is set. SIFI is systemically important financial institution. Sounds like a disease, but we don't want it.
It might be.
We shouldn't have it at all.
So they're talking about moving that to 250, so we come out from under that. And that allows us to, I think, release some dollars that are caught up in some of the compliance and other efforts that we have.
That's a big deal. Why would you be a SIFI?
Yeah. We shouldn't be, really. But, we'll take those dollars and reinvest them to better serve our customers.
You mentioned that the business that you're doing with Apple.
Yeah.
What are you doing?
Well, Apple has an upgrade program for their phones, and so we provide the installment credit for Apple's customers. And so we're Apple's partner in doing that.
How do those customers look financially?
They look great. I think the average FICO score on those loans is about 755. So we get to set the credit box in conjunction with Apple. So it's a very nice program. Apple has very high standards in terms of the customer experience in their stores. So we have very limited time to make the credit decision, but we've been, I think, living up to their standards.
Let me ask you real quick before you go, if you have to see this kind of a move from a 40% tax rate all the way down to 21%, that is a big deal.
Yeah.
Are companies poised to put that money into buying back stock and paying dividends, or do you think they're poised to put it, like you said, in investment?
Well, what's interesting, you've seen a number of companies, including ourselves, give a one-time cash bonus to employees. We're making a contribution to our foundation as well. More broadly, I think there'll be more investment in capital expenditure. I think there will be more buybacks, but that's a good thing because that creates more money back to shareholders, and then they can reallocate that into new investments and keep the economy going.
Yeah, it's a good development. Bruce, it's good to see you.
Likewise.
Thanks so much for joining us and weighing in here. Bruce Van Saun there, Citizens Financial.